Alright, I don't get it, VP. You didn't put the MACD in your Dirty Dozen video, even though it's a really, really common Forex indicator. Does that mean you actually like it? Uh, It is time we talked about the MACD, the Moving Average Crossover Divergence Indicator. I actually planned on making a video like this much sooner, but I think it's appropriate for what we're doing now, and those of you who follow the channel I think are going to understand why really soon here. But in this video, if you are not familiar with this channel, this is the first time you are watching it, and I feel like in the future it's going to be that way because the MACD gets a lot of searches on Google and on YouTube. So if you're seeing this for the first time, I'm going to catch you up. It's only fair that you actually know what the hell I'm talking about when it comes to a lot of these things, and we're going to try to get you caught up in a hurry. And then there are different types of MACD. I don't think a lot of people know this. I think they only know this indicator as one thing, and it is many variations of things, and we'll talk about that. Because it's easy to get confused, and talk about what it does. It does a lot of things. And you may be saying to yourself, well, that's good. Yeah, an indicator that does more than one thing, that must be nice. Well, no. It all depends on if they do those things well or if they don't. And it does one thing particularly well. There are other indicators that do this one thing better, but this one thing has netted me thousands of pips in my career, and it has been responsible for some of the biggest trades I've ever had. And I'm going to show you this today. And I'm racking my brain here whether I should be giving away all of my best stuff right away like this. I've been firing missiles out of the gate, just giving you guys some of my absolute best tips. And this is one I really wanted to save, but I can't think of any other place to put this video in the sequence. It just wouldn't make any sense if we did this later, so I'm going to show it to you now. So here we go. So for those of you who need to catch up, we'll go over this really quick. I put out a video called The Dirty Dozen, 12 Forex tools that everybody uses some combination of, and I tell you why they're horrible. This is going to come as a surprise to you that I'm making a video on the MACD, and I'm not praising it, and I'm not showing you all the wonderful ways you can trade with it, because that is not what this video is going to be about. And there's a reason why I dislike very common trading indicators, and you need to understand that first so you know where I'm coming from. Also, I did a video just a week ago from when I put this video out called Trend Indicators. So I am a trend trader, and I use trend indicators, and I put them together in my little algorithm system, and that's how I enter and oftentimes exit trades. And that video is a very important one because there are thousands of indicators out there for you to go find. This search can either take you forever, or I can narrow it down a lot, and that is what that video does. If you want to trade like we do here, that video is extremely important, and this video I'm making right now does not make as much sense unless you watch that one first. But it will be worth your time. This channel is very exciting to a lot of people because they want a different way to trade. They don't like trading with the same stupid 12 to 13 tools and indicators over and over again and getting no results. This is the antithesis to trading that way. And once you get on board with our way of thinking, you are not going to want to leave. And so, believe me, those videos are going to be fun to watch. They're going to be very eye-opening. And if you just want to pause the video right now, I'm going to link those down below, and I'm going to put them in the little cards up here as I talk about them, which I already have. You can go watch those videos and then come back. I highly recommend you do this. So please, before we move forward, go watch those videos first. And if you're confused as to why I'm a trend trader and I don't look for reversals, I made a video on that as well. I will link that one down below. If you yourself like to trade reversals, I think that video is even more important than the other ones because I need to get you out of that mindset as fast as I can. There is the way everybody else trades, also known as the 99%, the people who can't quite make it to where they want to in Forex, and most of them actually lose a lot of money. And then there's the way we trade. You have found this video. You have the chance to get on board with the way we trade. I suggest you go do that. So let us go ahead and move forward. So I call the MACD the Swiss Army knife of indicators. And you're like, oh, well, Swiss Army knives are cool. You must be giving it a lot of praise, right? No. Swiss Army knives, as far as the quality of the tools they have, are complete trash. It's great that they do a lot of things and you have it all right there in front of you. But you remember when you got your first Swiss Army knife when you were a kid? You thought it was so cool because it had all these little things it could do. And you realize right away that the main blade doesn't cut shit. Good luck trying to cut a rope or a tree branch with the knife and a Swiss Army knife. You're going to be there forever. It sucks. The other one's even worse. I don't even know why they give you two. This one's worse than the other one is. You get these two terrible bottle openers, and then scissors. Scissors are cool, right? That the scissors barely cut string. None of these things work really well at all. And when I got my first Swiss Army knife, I was 8 years old. I didn't need the fucking corkscrew for anything either. So great, I guess, when you're 8 years old. But then when you grow up and you actually want something that works, you move on to other things. You would much rather have something that does one thing really, really well. And that is the natural progression. And that is what we aim to do here with the indicators that we choose. But there is a certain part of the MACD, like I said before, that is really worth looking at. But let's talk about all of those components. So what does the MACD do? Now, if you've watched the other videos, like I have told you to do, or if you have done already, it is a two lines cross indicator. When one line crosses the other, that tells you to go long or go short. It definitely falls under that category. It also falls under the zero cross category. If you put a zero line on the MACD, there will be times where the lines will cross zero up or down, and that's going to give you a signal as well. It does do reversals. I think that's why most people use it, and this is where most people go wrong. But it does call trends as well. When it crosses that zero line, that is telling you that there's a trend going one way or another. So this is one of those rare indicators that actually does try to call reversals and try to call trends. And then there's that other little bit that we need to talk about, because this is the one part that can really benefit you. But I'm not going to talk about it just yet. We need to actually go to our charts pretty soon and look at some of these before I uncover what that is. But first, if we don't talk about this right off the bat, it's going to confuse you down the line. There's a lot of debate over which MACD is the right MACD to use. You may have an image of a MACD indicator in your head right now, but that's not everybody's image. This can go by a lot of different things, so there's already problems with this. Does the MACD use a simple moving average or an exponential moving average to determine the lines on the indicator? Some will use one, some will use the other. Both of these variations exist out there. Which one is the true one, and which is the one you should be using? We'll talk about that. MT4 has its own MACD. It's really weird. Should you use that one? Is that legitimate, or should you use something different? There's a histogram on the MACD. What the hell is it? What does it do? And should you be using it as well? We kind of need to answer these questions before we go too much further, because if we don't, then the examples I'm showing you aren't even going to be good examples. So let's go ahead and go to my charts now. I will answer these questions, and then we will go over everything the MACD does, and then talk about the one thing I think it does actually pretty darn well. So here we are on my charts. We have the Eurodollar daily, just your everyday most heavily traded currency out there. So we will look at the MACD below. Now this is the one that comes with MT4. I don't know what you learned when it came to learning how to trade Forex and your understanding of what the MACD looked like. But to me, it certainly wasn't this. And I don't know what this is even supposed to be. I've been told that it's supposed to be two lines. So this is one line, and what I've been told is the other line is supposed to be an imaginary line that is drawn along this histogram. I would rather you just give me two lines, and we'll just call it a day. This is complete nonsense. I don't know why it even exists. I don't know anybody that would want to trade with something like this. So the one that comes with MT4, I would completely ignore, and I would go look for other variations. So this is the one that I ended up having. I don't know where I got it from, but It's a lot more accurate in terms of what you should be using. Now, the whole debate, do you use the SMA or the EMA? This one here is the EMA. This is also the EMA, from what I understand, but there are lots of variations of these out there. Use them. Like I said, I don't know where I got this one, but there are different variations of MACD all over the place. It was created in the 1970s as a stock trading indicator, so already by default, it's not really what we want. But there have been variations built recently by programmers that program indicators for Forex. There are other MACDs out there. I have not had success with any of them myself, but like I said in my trend indicators video, you might. There's some really cool, obscure variations of the MACD out there, and every video has a corresponding blog. I will give you some variations to download in the blog itself if you want to play around with these. But just know, to answer the SMA or EMA question, it doesn't really matter. Find one that you like and study it and see if you can get anything out of it. Yeah, let's also, while we're here, talk about the histogram before we go further. I want to go further in this. I'm chomping at the bit here, but I told you we talk about the histogram. All it does is when it flips from negative like this to positive, here's your 0 line. So right here it's negative. And when it flips positive, all that is doing is telling you that one line has crossed the other. That's all it does. It's worthless. I mean, you have two eyes, right? You can see that the blue line just crossed over the red. You don't need a histogram to tell you that. On a lot of these, you can actually go into the settings and remove the histogram. I know for a fact that with this one, you cannot. So if it's on there, it's on there, but you can completely ignore it. The two lines and this 0 line here is all we care about. So let's talk about what it actually attempts to do. So what I think I would say 90% of people who use the MACD use it to call reversals. So they wait until the lines get pretty far away, either positive or negative, and they wait for it to cross back up. And in this particular example, both times I think it really tried to do that. It did a pretty good job. Let's take a look. So it got you in probably right here. That was a decent trade. And then, well, maybe right here. That was not so good. That didn't yield you a whole lot. That was probably a loss in the end. And then over here, where exactly? I want to say probably right here. Took a little bit of drawdown. Yeah, that was a small winner right there. So good job in calling reversals overall on that one. You would have made some money, but you guys know by now, using indicators to call reversals is a sucker's game, and you know exactly why. If you watch that reversal versus trend video, you know. Do not be fooled by one-off examples. But that is what I believe to be the main use for the MACD for most people. Now, what it also attempts to do is cross the 0 line. So here's the 0 line here. As soon as, and you can really choose either the faster line or the slower line whenever it crosses, that's going to be your signal to enter a trade one way or another. So right here you see it went short, and it called it really darn well, didn't it? So the blue line would have crossed right here. Let's just go by that. And that gave you a really nice trend. Now, dirty little secret, most trend indicators would have gotten you in right there, if not sooner. So good job, MACD, but it's not like you're a one-of-a-kind special indicator in that regard, especially if you look at a couple times where it didn't do that. So if you try to get in there, you can see the line going down below. That was pretty much a loss. Didn't even get you 100 pips on the daily chart. And then try to do it again. Going long right here, didn't it? Somewhere right about there. Let's see, was that a lot? That wasn't much. And then if you didn't have the sense to get back into that short, not only would you have lost, you would have missed out on that trend. So, not bad, but not great either. So the two things it attempts to do, two lines crossing for a reversal, or crossing the zero line for a trend. And you can use those other variations I'm going to give you in the blog and see if that works any better for you in terms of calling the trend. But the default version, I have found over time, doesn't seem to do that very well. It actually, let's take a look over here. It tried to do it again. Blue line crosses here. Oh yeah, there is no profit to be made. Is there? Nope, that is pure loss. Yeah. So don't get too excited over those two things. But I thought it would be cool to show you an indicator that actually has the two-line cross and the zero cross at the same time, because in your searches you're going to find quite a few indicators that also do this. And if you do, there is something really cool that you can look out for, that if you find an indicator that does this really well, is going to be a fantastic get for you. And I want to move over to the Aussie dollar just because it better illustrates what I'm talking about. So let's just go same indicator and then move over here. So here it is, the big takeaway from this video. And I don't think this is such a novel concept, really, but I think to a lot of people it is. And let me just, again, tell you how really great it is when you find a very good indicator that is like the MACD, not one that is the MACD, but one that kind of operates the way the MACD does and gives you these signals with high accuracy and big results. I call this a continuation signal. All right, so when people look for two-line crosses, they look for these reversals, like right here, and right here, and right here. They are going about it the wrong way. Do this instead. So first, we need an actual zero line just so we can see it. Let me see if I can put one up. I think I can. Yes. All right, so I want you to wait until both of these lines are either under the zero line or above the zero line. And these, in all of the cases here, they're going to be underneath. So not this. I want you to wait till both the lines are under and have not touched that zero line. And I want you to wait until they cross going that same way. So both the lines are under zero, which means we are in a downtrend. I want you to wait for them to cross again, going downward. If we're in a downtrend, you're looking for down signals. If we're in an uptrend, we are only looking for up signals. We are not calling reversals. We just want to keep going with the trend. That's what we're looking for. But the rule, and you must follow this rule, is none of these lines can have crossed upward before they cross downward. So this is a yes. This here is a no. All right, see the difference? So let's go ahead and see how these trades would have done. Now, I normally try on the daily chart to shoot for 100 pips. Now, recently, as you guys know, our market has been so slow in terms of how many pips things move a day. I don't always shoot for 100 anymore. In a lot of cases, I shoot for far less than that for my first profit target. But let's just say, to have that round number there, if these can hit 100 pips for us. So let's take a look at this first signal. So that is what we're looking for. And it got us in right on this bar here. And did we get 100 pips? We certainly did. Nice and clean. Good win. So let's keep moving. This does not qualify, as we know. But this here does. Let's take a look. We got in right there. Did we get 100 out of this? We did not, but we got kind of that 85-90 range, it looks like, once you factor in the spread. So as far as modern day trading goes, I would have definitely gotten something out of that, because I don't shoot for 100 on the Aussie dollar anymore, I can tell you that. So good on that one. Looks like we had a bit of a loss here. We got to be fair. That would have been a trade as well. We can't trade in hindsight. That's a pretty big candle. And that would have probably hit my stop loss. So that's not a good one. We'll chalk that up as a loss. But then I think we made it back here. Let's take a look. If we enter this one, do we get 100 out of it? Really close. So I'd have gotten something out of that one as well. So on an inferior indicator, and I'll say this again, don't actually use this indicator. Check out some of the variations I gave you, see if you have any luck with that. But be on the lookout for indicators that have 2 lines and a 0 line, because you can pull these trades off, and if you find a really good indicator to help you do this, these trades could end up actually being the majority of the money you make down the road. And I will refer to these in the future as continuation trades or continuation signals, because they are continuing the trend we are already in. But understand the rules there. We'll go ahead and go over them in slide form so you can take notes if you want. So the rules are very simple. If you find an indicator that has 2 lines that cross and have a 0 line, here's what you do. If the lines are already over the 0 line for longs, you wait till they cross upward and then you go long. But the lines cannot have crossed down at any point. If they have, this trade is disqualified. But since the last time they crossed, if they have both remained over 0 and they cross upward again, go long. Conversely, if the lines are both under 0, you're looking to go short. And when they cross, go short. These are great trades because we are not trying to call reversals. We're not trying to hope and pray that a trend has officially become a trend and we're just not quite sure. We are entering trades that are already with the trend. And this is really where the game's won. These can be some of your highest percentage wins down the road, and these can, again, be the trades that account for the majority of your profits. And it is worth however long it takes you to find an indicator like this that can do this for you and can do this well. And if you find one that is close but not quite there, get in there and tweak the settings. It's just a matter of time before you find something you really want and that you can really keep. So to wrap this sucker up, in conclusion, don't use the classic MACD. Don't even use the one that I was showing you. If you choose to play around with some of the MACDs that are actually current, that weren't made in the 70s, that were actually made by people for the market we trade, start at least with some of the examples that I give you in that blog and play around with them and see what you can do with them. But only use the part that works. Don't use them to call reversals. Don't use them as a zero cross indicator. It is an inferior version of a zero cross indicator. Use that one part I told you. Use them to find a really great continuation trade and see if you can find one that gives you one with a lot of success. Because if you do, let me tell you what, my biggest trades ever. I forgot most of the trades I have made. I've forgotten 99.9% of them. But the ones that were legendary, the ones that lasted for 1 to 2 months because they just kept going, they were all due to me entering a trade in a trend that was already going that way. They were all continuation trades. And I want you to be able to take part in these kind of trades too. But you got to do the work and find an indicator that gives you these at a really high clip. So, have you ever heard any kind of information like this? Have you heard anybody talk about any of this ever? You're not going to. I challenge you to find anybody that talks about any of the things I talk about. You will not find them. Any MACD video you have seen up until now has been people raving about how well it calls reversals and all these great things the MACD does. The MACD overall is pretty shit. But there is a great lesson that can be extracted from it, and I hope I have showed that to you. I hope that you go use it, and I hope that based on everything I have given you so far that you were able to go find that fantastic indicator that gets you into those continuation trades that makes you a ton of money. And I got a lot more coming down the pike here, guys. Subscribe and hit that bell. I don't want you to miss anything. Every single video I make gives you something actionable that you can take right now, apply it into your trading, and start seeing results. And I wish you the best in your search. Go out there and find that indicator that gives you that fantastic continuation trade and make a bunch of money from it. It's going to take some time to find, but when you do, it is 100% worth it. Go get it.